Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live in this live session with you all. And this session relates to a very interesting thing. I'm not going to talk about the stocks that could perform over the next 6 8 months, but I'm going to talk about stocks that could be under pressure going forward, at least for the next 10 to 12 months or so, next 1 year. So let's get the things going. First of all, a disclaimer that these are not stock recommendation, and anybody taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Hi there, hi everyone. Hi Said, hi Mr. Pawar, hi Mr. Sethi. Uh, Now the thing is, why I was late, and I need some help from you guys as well. It's a small issue, but I'm not able to rectify that. So hopefully I can get some messages on it. I am now using Microsoft Edge. I used to use Google Chrome, and in that, what the issue is happening is whenever I'm starting a live session, the webcam is not opening immediately. Although I've given all the permissions and everything is the same as before. So when I start the live session, it's not the webcam is not starting as I begin with the live session thing on YouTube in Microsoft Edge. It has happened, so now I'm live streaming. So for the last 20 minutes, 20 25 minutes, I've been trying to rectify that. I was not able to do that. So kindly do help me with that as to what sort of a problem that is and how that can be rectified on Google Chrome, because on Google Chrome I'm not able to. The live stream is happening, but the cam is not opening. The webcam is not opening, although permissions have been granted. So, would look forward to your replies on that. Coming back to the session itself, we'll talk about the markets a little bit, and I'm going to talk about a number of points with respect to the sectors that I believe may not perform that well. So there are at least 3 4 sectors that I feel are going to be in trouble even when the market recovers from here. Those stocks may just have a dead cat bounce or a rally, a small rally of 10 12%, and selling would begin from July onwards. And I'll also explain as to why I believe from July onwards, August onwards, selling would begin in those stocks. So it's a Sunday. Last Sunday, I couldn't be online because of my health. Still, I'm having a bad throat here, trying to get that well as well. But we'll continue with the session anyhow. Uh, so, about the markets, for the next 3 4 minutes, I'll talk about that so that more people join in, and then we'll discuss in earnest about the sectors. To talk about the markets have been in disarray across the globe, and now that 17,000 has been taken out, 16,800 has been taken out with prom, and now we are firmly trading below it. I think we are headed much lower. Next protocol is around 15,800, 700, which was the lows during February or end of February. So there is a possibility that this week, because of the IPO of LIC, because of a number of issues that are happening with the economy and price rise, we have the you can say gas cylinder price rising and everything else, LPG cylinder price rise. So a lot of things are happening, and that is probably why the RBI has increased the rate. So I believe we could be looking at 3 to 4% decline in the Nifty this week, the coming week, and maybe from the second half of May things would stabilize. From June onwards, things would completely stabilize, although it will be volatile. And July onwards, and July and so on and so forth, things should get better. So the first half of this year, as expected, has remained under a lot of pressure, and that has been the case. That was quite what was evident from the fall, from the way the markets went up in 2020 and 2021. Yeah, the third year, at least for the first 5 6 months, will face the music of the market coming down because of one reason or the other, and that is what is happening. So the reasons followed later, but the valuations in October were stretched, and it looked like we'll have a 5 to 10% correction, but eventually from 18,600 to 15,700 we have had 15-17% correction. So that was there. So probably the correction in terms of making a bottom should be over within the next 10 trading sessions, and then going up. I believe from July onwards we'll see the markets go up, we'll see stocks go up, but not all stocks will go up. And that is where I would like to talk to you about some of the sectors that will continue to be under stress even when the market recovers, even when the mid cap and small cap market recovers. There'll be a recovery in the first phase, there'll be a recovery across the board. Some of the stocks will rise even more than others, and those that do not rise a lot will fall a lot later on and may also break the current May lows in those stocks. So four sectors I have thought about, three or four sectors, we'll discuss about them. The first and foremost, and you would understand, or two sectors that would go hand in hand and may not perform that well. And that's why if you are invested into those stocks or those sectors, you need to be extremely careful and probably take out from those, or stay out of those positions whenever a rally occurs, whenever a 10 to 15-20% rally occurs from the bottom. The two sectors I want to talk about are real estate and infrastructure. I believe both real estate and infrastructure sector will be under pressure at least for the next 6-8 months. In that, we have seen how Godrej properties have behaved, sober developers, prestige estate, everything of this sort will be under pressure, brigade enterprises, and so on and so forth. What I feel is that what you need to do here is that if you are in very good quality real estate companies, you will get opportunities to book out slowly. So whenever we see 15-20% rally because of one news or the other, start taking or start lightening your positions in those stocks, and get into sectors which are more export oriented, get into sectors which are immune to economy here in India, because over the next 1 year I see economy under stress even more than what it is currently. So in those two sectors, we have talked about real estate. In terms of infrastructure, even L&T on rise should be sold into. If you don't have a 3 year view, if you have a 3-4 year view, then nothing of these things apply what I am talking about. If you have less than 3 year view, then you need to probably make way from these sectors and get into better sectors in the same frame. So other sectors in the same frame which are more export oriented. So in terms of infrastructure, L&T, Sadbhav Engineering, all KNR Construction, all those kind of companies which are into infrastructure and building, and even building material companies have already been bashed and battered. I feel they might come back uh, from you can say September, October. Uh, but uh, but I believe that they will be selling in these sectors. They'll be selling in the larger stocks in these sectors, the stocks that are the marquee stocks. On any rise, you will see a lot of selling in these kind of stocks. So these are the two sectors basically. The third sector that I feel is going to be under a tremendous stress and have been under stress over the last 2-3 years have been autos. And now, yes, select autos, maybe Hero Motocorp may rise another 15-20% from here because of the kind of bashing it has received already. But two-wheelers, four-wheeler auto companies, uh, as well as auto ancillaries may still remain in the cloud. So what will happen is something like a Motherson Sumi at 130, 140 will have a 20% upside, 170, 175, and then slowly it will decline again. So you remember what happened with something like IB real estate, something like in the real estate counter, that they rose to 180, 190, and then a complete collapse of those stocks happened. I don't say that the same thing will happen, But what will happen is, say from 170, 180, something like a Motherson Sumi, and these are only examples, may again go back to 130, 140 in 6 months. So what you will find is, if you had bought at 140 after 6 8 months, say in December or January, you will see the stocks at same price at 140, 150, where the markets would have gone higher. So I believe from July onwards, the market, overall market, whether Nifty, mid cap, small cap, will rise, but these sectors will remain under a lot of cloud, will remain under a lot of stress, and things will not be the same in everywhere. So it won't be that it will be a secular rally, but you will see 18,000 on the Nifty, you will see mid cap, small cap running up, but there'll be other sectors doing the things, and I've always talked about those sectors which are more export oriented in nature. So autos, infrastructure, real estate are a complete avoid for the next 8 months. Yes, I'm not saying you just sell tomorrow. I'm saying that you will get rallies in them to exit, and that is when you will, like, you should exit in a 15 to 20%, 25% rally from current levels. Coming to the fourth sector, and these three are pretty much the writing is on the wall with the kind of inflationary pressures we are seeing currently. It is extreme pressure, and that's why RBI had that emergency meeting midway through, and had to raise rate in such a manner. And probably they'll do the same in June, maybe in the same texture, but around 20 25 basis points could be uh, raised again, because the inflation is not getting controlled, and that will have a percolating effect, a lag effect over the next 2 3 quarters in these three sectors. The fourth sector, which may, in my opinion, it is a 50-50 kind of a thing. If you are looking at a little bit of debt in this sector, which is the consumer sector, then avoid those companies. If companies are debt free and growing well, then not an issue. If the growth is coming in, wait for March quarter results, and you'll understand as to which companies are doing well, which companies are not doing well. And probably you have to select in this sector, but most of the consumer centric companies, especially FMCG companies, especially companies which have oil as their raw material, plus which are impacted because of the fact that they would not be able to raise prices in the same vein. Some of the stocks, some of the companies, of course, Nestle, etc., Asian Paints, Pidilite, etc., have pricing power, and they might end up over the next 2 quarters raising prices to a level where they will negate 80 90% of the pressure of, you can say, higher interest burden or higher inflation. But other companies which are lower down the ladder may face a lot of trouble, especially in sectors which are very competitive, say the home improvement sector, be it tiles, be it plywood, be it kitchen accessories, be it anything. There's a lot of competition, margins are less. Look at the FMCG sector, a lot of competition, margins are less. You will feel the heat. So what will happen is, these stocks will try to will move 8 10%, 12%, and would come back. Some of these stocks will go down 10 12% even more than their current price, and it would they would completely remain in range for the next 8 months or so. So that's where you would say that you would not lose a lot, but you will not make a lot of money, at least till October. I think in this sector, the consumer sector, there's a vast range of stocks, and some of the stocks which are more, you can say, marriage oriented, which are more festival oriented, may perform. Something like a Nika, something like even a DMart after 4 5 months. A company like Titan, they may end up performing if they get sold off to, say, a Titan to 2000 1900, may start performing from July August. But most of the companies, 80 to 90% of the mid cap consumer oriented companies, will suffer. Their numbers will suffer from June quarter onwards, and that is where my next point is, when I said that from July August onwards market will reverse. But these companies may suffer because the June quarter numbers would come out from mid July, later July, and probably in August, most of the numbers. So you'll see the pressure in August and September in these companies, especially infrastructure, real estate, autos. And if the global economy doesn't pick up and auto ancillaries are not able to export that much, say the trucks, you can say ancillary companies, if we say Bharat Forge, etc., if Canadian and US truck orders are not that great and the economy doesn't come up that well and inflation doesn't get, you can say, arrested, we could feel a lot of pressure in ancillary firms, because most of the auto ancillary firms do export. So uh, you have to be careful. There could be a rally coming up in late May, early June, for a week or two, and then another sell off, and then a sustained rally from July onwards. But some of the sectors, as I mentioned, will feel the hit. There are some comments coming in that sector do not matter that much and could be specific stocks. And if we are stock specific, will do well. Well, if you can do diligence and get into specific stocks in the sector which are not performing, you will be saved in a sense that you will be saved in a manner in which you will not lose a lot. You might not make a lot of money. Why I am saying that you will not make a lot of money is because when a sector is under stress, no matter how good results are, stocks will get sold off on good results. We have seen what happened with IT. Top level results, very good quality results compared to other sectors, yet IT index is down 23% because the market decided that around 39,000 on the IT index, the index was extremely expensive, and it got corrected by 20-25%. So you have to be extremely careful what you're buying. If you have done your thorough research and if you can hold on for more than 3 years, then not an issue. But if it is a less than 3 year, less than 2 year, especially less than 2 year or 1 year issue, or you have a time frame which is between 1 to 2 years, you have to be careful. But because what will happen is over the next 6-8 months, you will lose a lot. Says in something like a Dixon, and this is just a pure example, no recommendation, but somebody who's holding Dixon at 4400 after the stock has fallen from 6000 would think that they bought the stock at 25% discount from the top, and the stock is down already to 3800, maybe headed to 3300. And then Dixon will come out with at least 2 quarters in which the margins will shrink even further, and you'll see what the effect that would be if that happens. So you have to wait for the results. So that is why probably it will take 1.5 years for a 5000 to come back. You might not sell at 4400, you'll wait for a at least a 20% upside, which means a 5000. It will take at least 2 years. So what will happen is over a 2.5 year period, you end up making 20%. So that is the kind of, you can say, opportunity cost that you lose. That is the kind of money that you end up losing. I'm not saying that you will lose per se in terms of mark to market thing. You might end up making money, but you will lose a lot of time. And that is why it's better if you have a less than 3 year time frame to probably have a portfolio which is more oriented towards a dollar, which is more oriented towards export earnings, which is more oriented towards companies which are insulated from the Indian economy, because the next 1 year could be very difficult for the economy. All right, so I'm ready to answer your queries. Kindly use the super chat and super sticker feature that will help in grow channel, that will help you also ask questions and eke out answers in greater detail. All right. See, the pharma sector had done well till 2021, and we have seen 1 year of correction. I believe pharma is set for a move, especially mid cap pharma, which are into specialty APIs, etc., should do well. Large cap pharma, I like DVs and you can say Dr. Reddy's, not other companies. So these are some of the companies. Mid cap pharma, I might be having some of the stocks. Sequent looks good, something like a Loris look good. There are certain mid-cap pharma companies which could perform well. All right. Thanks a lot, Manipal, for your contribution. Hitachi Energy and you said Torrent Power. See, I'll answer about Hitachi Energy and Torrent Power. So Hitachi Energy is a buy on any declines, but it's a long-term buy because it has gone up a lot and the valuations are out of whack. Not a 1 year play, but a 3 to 5 year play, yes, and keep on accumulating. Similarly, Torrent Power or the power companies, I like Tata Power more. If you are holding torrent power, hold the stock for a 15-20% up move. But if you really want to buy something in the power sector, Tata Power around 210, 220, 220, 230 could be good. Any declines you should look at. Sell Motherson Sumi around 170, 180 rather than holding 2 years, as I explained about the auto industry. Although I believe auto industry could recover by next year, but the chances now are becoming even smaller with the kind of rate hikes we are seeing in India, and demand could be even under more stress. Anirudh, thanks for your contribution. Yes, on Naukri, I believe you can start accumulating, especially I'm all to it. In fact, a video came up just a day or two back about InfoEdge. Yes, it was a presentation that was made about a week back, so a lot of things happened in a week. I believe it is at very much discount. If you have 3 to 5 year view, go ahead and buy. If you have 1 year view, then buy carefully because there could be a situation where in the next 1 year you might see the stock higher, but you might not be able to sell. What I mean is that stock may go to 3200, go to 5000, come back to 4000, and you might not be able to sell, but over 4 or 5 years should do extremely well. See, KPIT, a disclaimer, I have the stock in my portfolio. Stop loss is 520, target is 590. If you want to buy short term, long term it's a very good buy at these levels. Very See, it has corrected a lot and the numbers are set to become even better going forward. I believe Balaji Amines and most of the chemical companies, and I have not said that earlier, I believe these kind of companies could do well going forward because of its their exposure to Europe and US and their exposure to export oriented products and exporting. So yes, there is a chance they should do well over the next 2 years, but not immediately. So that's the call. Ravi, thanks for your contribution. Uh, See, 6,000, nothing is overvalued or undervalued. It is all about what is the market condition. So at the moment, 6,000 doesn't look overvalued at all. But if the market wants, they could just drive the stock back to 5,000 and say that because of higher interest rates, loan growth will be lower and so we are selling. But I believe if you have 3 year plus view, you can buy. 1 year view, I don't know. Probably you can buy here, keep a stop loss at 5,700, 5,650. Look for 6,600, 6,800, and just book profits. I think for the next 6 8 months, all financials and you can say loan oriented companies will feel the heat. So that's the call. I think MTAR Tech is a stock in the defense space, which is very attractive at the moment. But again, not a 1 year play. It's a good 4 5 year play. In fact, it could be a multi bagger with the kind of you can say drawdown it has seen. And the company is set to perform well. The numbers are set to continue to be good. But again, I won't say for the next 1 year it can do well. I would say avoid Apollo hospitals at the moment because the pandemic thing is over. The numbers would be back to the normal of 2018-19. LTTS and all IT companies, my view is that the bottom is very near. You can start accumulating. I don't know when the reversal will happen, but whenever that happens, I think IT is something that should perform extremely well in the second half. Okay, thanks a lot, Mr. Tota, for your contribution. ICICI Bank, in Motherson Sumi Wiring is a sell. So Motherson Sumi Wiring is a sell on any rise. See, ICICI Bank is a top-notch bank in this field, but again, when interest rate go up, banks will suffer. So wait for the decline to be over and accumulate the stock. I won't say you sell, but whenever there is a bank nifty rally or banking rally, probably in July and all, I think this sector again is going to feel the heat from August, September. You take an exit if you make money in ICICI Bank. So that's the call. So PI Industries was a buy at 2300, 25, 2400. Now it has gone up a lot. I would say avoid. If you have the stock, hold on to it till July. In a rally in July, probably take an exit. Again, Jubilant Foodwork has been bruised and battered. One should have started accumulating the stock below 600. If you have it, hold. If you don't have it, accumulate. Have a 3 4 year view. It should do extremely well. I won't be surprised if it goes to 1500 in the next 4 years. Something like Jubilant Foodwork. There is a lot of negative that is priced in the stock. I would say SpiceJet, any airline company, anything in this kind of an environment on any rise, take an exit, take a loss, get into other companies. Lakshmi Organic is a good chemical firm. Again, for long term, looks good. One can start accumulating here. Tata Elxsi around 7,000 is a buy. My target is 11,000 over the next 2 years. I think it should be possible. It should come up before 2 years. So buy around these levels and on declines to 7,000 or so. All right. Deepak, nitrite on declines can be accumulated. I would avoid camps until and unless they come out with very good results. CDSL is a complete avoid. I think post LIC IPO it will fall more. I won't be surprised if it breaks 1,000 the way it is going. It might even break 1,000 over the next 3 4 months. So that's the call on CDSL. See, all these stocks which are related to investments, which are related to mutual funds, which are related to um other insurance than life insurance, which are related to financials, which are related to bank, which are related to manufacturing, anything related to debt will get hammered even from these levels. So you have to understand that there is a complete reversal of rates in India and globally, and so these stocks will suffer. Export oriented businesses, IT services, uh, pharma, pharma companies, chemical companies, top notch chemical companies could perform well. I'm not saying they will, but they could. There could be a situation where everything will continue to fall over the next 5 6 months. A Lal Path Lab again and accumulate at these levels, very attractive levels, but it can go to 2000 as well. So be ready for that. All these kind of companies, but yes, very attractive from a 4 5 year view. Nika is also extremely attractive. All right, guys. Thank you. Thanks a lot for being online. We'll be online again, hopefully on Thursday. Please like and subscribe my channel. Hit the bell icon so you can get my videos straight away when I post it. And kindly do support me on Patreon. If you're not getting Patreon membership, you can email me. We have other means as well to get the membership. Kindly do email me for that. Thank you.